evening, everyone. Welcome to the second edition of the Block and Key Knowledge Series. This is our second webinar that we are hosting, and today we have a stellar panel with us. We're going to be discussing a lot of regulatory aspects. We're going to be discussing a lot of challenges that one faces today when it comes to digital assets. We have a huge experience base with us, ranging all the way from taxation to legal aspects to forensics, and to general fund structures, to what are the best ways to actually start investing in crypto assets. As we've always seen with the with digital assets, we largely hear only two large voices. One says that this is the future, this is going to change the way we live, this is going to change humanity, it's going to change the way we transact. And then the other voice is that this is all a fraud, a scam, and so on and so forth. This is just a bubble. There's no underlying, etc., etc. So we are here to try and basically go into the minute details, and sort of look between both of those voices and really try and understand what's happening behind the scenes here. We hope that we are able to add a lot of value to your investment decisions, to your digital asset decisions that you will take in the coming days, weeks, years, months. With that out of the way, I'd like to invite Michael. For Michael, if you can just quickly give us a short introduction, and we'll continue with the rest of the speakers.
Yes, thank you very much. My pleasure to join you all this morning from London. It is morning here. My name is Michael Halipas. I am a barrister. I specialise in financial crime and digital assets. I spent the last few years as a legal advisor and the lead crypto prosecutor in an offshore jurisdiction. I'm currently continue to specialise in financial crime and digital assets. I am an independent consultant to the government of the British Virgin Islands. I'm also an independent consultant to the Council of Europe's Economic Crime and Corporation Division. A keynote speaker. I launched my own project, Block AML, which is at the crossroads of financial crime, anti-money laundering and digital assets. I am a crypto native, which helps. Very open to digital assets. I believe that blockchain as a future is inevitable, and happy to be here this morning to join your discussion.
Thank you, Michael. Next up, we have somebody who's worked extensively in risk management and ESG. Ghassan, if you could please introduce yourself.
Yeah, sure. Thanks for having me. Pleasure to be here. So my name is Ghassan Zaidan. I run a consultancy practice, Paragon Consulting Partners, which, as you mentioned, focuses on risk management, internal audit, and ESG. In terms of the Web3/crypto space, I primarily came into this area once I entered into consultancy following a long period of work in banks and financial institutions, primarily in London. And my work in this space is predominantly revolved around risk management, risk advisory, internal audit engagements, and outsourcing of internal audit. So thanks very much for having me, and looking forward to the session.
Thank you, Ghassan. Moving on, our next guest is a seasoned tax and corporate lawyer with over 23 years of experience. Ashish, please join the stage and introduce yourself.
Yeah. Hi, I'm Ashish Chandra. I'm currently working as the Group General Counsel of CoinSwitch, which is India's largest crypto exchange. And I'm working here for last about 2.5 years. So pretty much seen the entire kind of spectrum of the crypto asset over last about 2.5 years in India, right from the taxation challenge to the regulatory challenge to enforcement challenge and all. And pretty much worked across industry bodies, worked across the regulators, law enforcement bodies to really bring India at a stage where I think all the extreme negativity is now the past, and we have a good kind of a light at the end of tunnel, and feel extremely optimistic. So personally, met and trained various regulators, tax officials, law enforcement bodies to help them understand what this asset class is, and what kind of benefit it gives, and if somebody is misusing it, then what kind of tools they can use to investigate and track them. Before that, I was heading the legal and regulatory and litigation function for WhatsApp in India for about 3 years, and before that, had worked with various large companies like Netflix, Reliance Jio, eBay, and all. And happy to share what I have learned in the crypto space with the audience. Thank you very much.
Lovely. Thank you so much, Ashish. Next up, we have somebody who's a seasoned business advisor, very senior board member to several regulated firms, Dr. Bhaskar. Please join us.
Thank you, Banner, and great to be here. A brief background: I've been a banker in London, leading global roles in investment banking, trading, risk management, commercial banking, etc. Also spent some time working for the British government in a variety of ministries, and after that, I was a regulator here in Abu Dhabi, where some of the very interesting things were rolled out locally in this particular space. And for the past couple of years, I'm an independent advisor and board director at various regulated firms in Europe, Israel, GCC, and India. Very happy to be here.
Likewise, sir. Very happy to have you on board. Next up, I believe, who's the youngest on this panel, Puneet Agarwal. He's the founder of CoinX. Puneet, if you can please share a little bit more on what you're working on these days.
Sure, Manar. Thanks a lot for inviting me, and it's indeed a pleasure to learn a lot from fellow panelists and also share my experience, whatever I've learned in the crypto ecosystem so far. Currently, I'm working on building CoinX. CoinX is a platform that helps all the retail investors in crypto ecosystem automate their entire tax calculations, and B, to all the enterprises in the space, they can manage their entire accounting. So, like imagine in one platform where you can account for all of your crypto transactions, maintain the entire P&L balance sheet, generate all of these reports, and then keep the entire book of accounts, not only for just transactions happening on chain, but also for transactions happening on your centralized exchanges and even the banks. So imagine all of this together combined on one platform, and thereby we are helping enterprises comply with regulation requirements, including reconciliation, so that they can, extensively do real-time reconciliation on all of their transactions and then generate compliance reports out of it. So this is what CoinX is about. And previous to building CoinX, I was heading the Crypto Relief Fund. This was the fund where Vitalik gave $1 billion worth Shiba Inu token back in 2021. But then since the coin is speculative, the value we realized is close to about $500 million. So I was managing the fund of 500 mil, deployed $170 million in a year, and then worked towards a lot of initiatives that helped India fight COVID. Looking forward to learning a lot from you and then contributing my thoughts here. Thanks.
Lovely. Thank you so much for joining us. And lastly, we have with us, Shami, who represents Dolce Vita Advisors, our co-hosts today. Shami, thank you so much for helping us put this together, and thank you so much for your presence today. If you can please quickly introduce yourself as well.
Thank you, Manar. It's a pleasure to be here with such a distinguished speakers. My brief background is I've been a private banker and moved to structuring. I'm partner with Dolce Vita Trustees. We advise family office in their structuring and helping them which jurisdictions are good or tax efficient, if I may say, in terms of holding their assets, or what are the new developments happening in Web3 and other assets. Because my exposure to this is where my clients ask me which crypto to hold or which digital assets to hold and where. So my exposure is from that angle, and happy to share that perspective to everyone.
Lovely. All right, with the introductions out of the way, let's dive right in. Our first segment today is essentially going to be around navigating the regulatory landscape. So because we have so many of you from so many different and diverse backgrounds, I'm hoping this is going to give us a very good, wholesome view of the the changing dynamics in the regulatory space. within, of course, digital assets. So I'll start with you, Michael. Block AML has been doing a lot of great stuff with educating various regulators around financial crimes. That area seems to be a complete, a huge gap for the regulators, for the law enforcement agencies also, where for the longest time they were trailing behind criminals who were trying to use various ways to obfuscate transactions, etc. And I can see in especially in India that tide has also shifted. We slowly come from the law enforcement lagging behind to now law enforcement actually being able to sort of tackle this head first. So what are you seeing from your vantage point, Mike?
Right, what am I seeing from my vantage point? So I think I benefited whilst I was in Jersey as their crypto prosecutor out there. That's when I did a lot of training for different public agencies on and off the island, and as well now with Block AML. What am I seeing? I definitely, through the conversations I'm having, I'm definitely seeing an increased interest in understanding at least the basics of blockchain and digital assets. It's clear that there is a drive globally for public agencies, for law enforcement officers to upskill. The international bodies such as Interpol, Europol, FATF, they don't recommend that every member of staff in an organization is a crypto expert, rather that everybody has a basic understanding. One of the problems they suggest is if law enforcement from Singapore, let's say, picks up the phone to law enforcement in France, there's an expectation that at least both parties will have an understanding of what the conversation is about. I think it's no secret that many jurisdictions and law enforcement agencies are behind the curve. I don't think that's a secret, but there is a concerted effort globally to increase education and understanding. That's what I'm observing.
And just a very quick follow on to that, how do you see this playing out, given that the ETFs have come, the institutions are coming, adoption seems to be going berserk? How do you see this accelerating as we move from here?
Without question. But remember, my starting point is I am a crypto native, and I believe that blockchain is inevitable for our future. I think one of the concerns is that there tends to be overall a general lack of understanding of the technology. We've entered a bull run. No doubt there'll be people chasing quick profits without necessarily understanding the basics of the technology. I think skepticism, or if we'll use a technical terminology, FUD, is an issue. There are inevitably crime risks, and many of the criminals are already well ahead of the curve. There's also, I think, a misunderstanding, if I may say that, of the term crypto crime. What we're observing is that many of the crimes are just carbon copies of traditional crimes. Yes, trad crime, if I can use that term, rather than crimes that are distinctive to this asset class. I've noticed that scams, frauds, phishing attempts, theft. They're much the same playbook as traditional crimes. So only that the asset class has changed. I tell you what else I think we'll see. I think as public agencies, law enforcement agencies, as they continue to educate their staff and better understand the basics of the technology, I hope that the effectiveness of and in private industry, the effectiveness of suspicious activity reports will improve. Without question, there is an effort globally, or an intention globally, for further collaboration and cooperation amongst different agencies, amongst public-private partnerships. That, given the immutable nature of these transactions, cross-border, without an intermediary, it makes sense that we will see hopefully increased collaboration, communication amongst different agencies. I'm hopeful. I hope it comes across.
Absolutely. I think The world is begging for that. Even in the G20, I think that was the larger sort of cry, and everyone was aligned to that fact that everyone needs to sort of get coordinated on this. Are any of you guys seeing anything around financial crimes in your respective domains? Open question to the rest of the folks here as well. I think this is a very interesting topic. Ashish, maybe this is something down your alley.
Yeah, so like what Michael said, that I mean, there's no separate genre of, let's say, crypto crime per se. I think the crime seems to be traditional crime, and crypto has just basically, replaced, I mean, some part of the value transfer mechanism. Earlier, people used to exchange values in cash and
Gold,
in
maybe, or
gold or
whatever.
something like that. So now that kind of value transfer has been shifted from the other kind of anonymous or pseudo anonymous asset class to the crypto. But from an India standpoint, what I have seen personally is that the crimes are more speculation related. Like everybody wants to become overnight millionaire by making investment in crypto assets. But that's not a problem of crypto per se. That's like an ecosystem problem. We have also seen that the recent advisory which has been given by SEBI regarding the overexposure of the mutual fund in the small cap, micro cap. They have even asked for their proof of reserve, their liquidity ratio, and liquidity kind of timelines. There are some sort of advisory which your SEBI, has given to the social media influencer. So the crime which comes because of the human speculative behavior, I think crypto is also a part of that asset, which is uh, uh, highly volatile, and people are there to dupe others, to lure them with high returns, and with no intent to really serve them. So that's like a very specific kind of a crypto crime, you could say, because of speculation. But otherwise there's no per se crypto crime. It's just an asset which is used by criminals to just exchange the value.
Sure. So very similar to, let's say, what was happening with UPI when it was introduced, and people were sending these links for uh, trying to trying to say that you're going to get a payment, but instead they would sort of the moment you click on the link, your bank account becomes empty, right? So those
Yeah,
kind of
that's also, it's like people don't have the education around how to really secure their wallets and all, where I think Liminal has a good use case, right? So if you don't really know how to secure your crypto wallet or your account of exchange, there could be account takeovers, or there could be phishing scams or something like that. That's also part of crypto related crime that's happening in India. And in fact, I was talking to a couple of very senior law enforcement guys of late, and I just asked them that, what's happening in this area, and they said that the crimes which are related to cryptos have really increased a lot over last about 6 to 8 months, maybe because of the bull run. So it
absolutely.
is a bit pain to them also, because they are also trying to learn about this industry, the crimes, how to investigate and all. Yeah.
Sure. Sure. Okay, moving on from financial crimes, let's probably come to the other side, the fun side, where, let's say, we're talking about fundraisers happening within this space. Shami, you work a lot with small and medium enterprises. You help them with fundraising. Um, what about when it comes to fundraising around digital assets? What are you seeing in that space? Uh, or do you see any kind of companies that are looking to get exposure to assets? What's happening in that space?
So, so I would break my answer into 2 or 3 parts. First is what is happening around the fundraise in India. If I would be not so naive to say that not many people really know what actually digital assets are. For them, the most of them, it is just a Bitcoin that they have heard of, and some of the articles that they see in the newspaper, nothing much knowledge about it. But
Sure.
yes, there are a lot of startups I've seen, a couple of them who are trying to set up exchange for this, or trying to set up their own crypto. It is very hard for them to raise the money, because but it's still a gray area whether you can invest in it or not. It's still a gray area. It's not very clear, and which regulator will regulate it. It's also not clear. It's a
This is
fragmented industry.
specific to India, you're saying?
I'm talking about specific to India. So
Okay.
what happens is that most often or not, we advise them to go into offshore jurisdiction for raising the funds, or even for setting up the company, because they will be safe. Because I'm not sure whether tomorrow the RBI will come and say that no, all the assets are, or all the companies which are dealing in this will not be regulated, or they bar them, or they close down. So I'm not 100% sure on it. See, if I'm not confident, I cannot advise my clients to go along with it. And
Absolutely.
if you look at it, RBI has not clear direction on this. If you look at it, even SEBI, they have no clear instructions on what to deal with the digital assets. They have come up with some guidelines, but if you look at the law, it is not clear. So the Indian ecosystem faces a lot of challenge in raising the funds around it. As far as holding the assets, again, this is a challenge, which is a right structure to and with jurisdiction to hold on. It depends on host of factors, like where the income was, and where the residency or the citizenship of the person is. Because through LRS route, if I look at it, it's not clear whether we can actually own the digital assets through LRS.
Correct.
And so that becomes a challenge, and so the multiple structure, layering structure, has to be set up to ensure that we don't fall on the wrong side of the law.
Sure. Are you seeing an increased interest based on what's happening globally in the digital asset space?
Definitely, if you look at 3 or 4 years back and today, the scenario has definitely changed. And a lot of people are started talking about not only crypto, they are also talking about NFTs and other tokens and other things. They have started taking interest. They are asking the queries, which will be the right advisor to whom to go, and which digital asset is better. People are more aware that it is not just Bitcoin that is a crypto. So they are also seeing interest. We are seeing that they are going to other kind of crypto assets also.
Lovely, lovely. Dr. Bhaskar, moving from, say, small and medium enterprises, startups, you work extensively with funds. There's a lot of discussion around funds and that whole tokenization piece. What are you seeing in that space?
So it's just not what I would call as funds, but any institutional player who's interested in crypto is asking these questions. So whether you're talking about corporates, whether you're talking about family offices, family businesses, funds, they're all starting to ask questions about digital assets. And it roughly falls into three buckets. The first bucket, what I would call as, are you able to, as a fund or any other corporate, able to invest in crypto? Now, obviously, the answer is yes. You can very easily go to an exchange and buy it. But when you're talking about institutional players, their requirements are pretty stringent. The kind of stuff that they need in terms of KYC, AML, banking, custody, processing, they are set up to actually handle equities, bonds, derivatives. You can't really just set up something just for crypto and expect that to happen. So the first issue that is of investing in crypto is quite a lot of question mark, because they don't get good, solid institutional answers to that question. The second question that comes up is, can I actually tokenize my financial instrument? This is a question that what a lot of people have been asking, and there have been some answers. Now, obviously, if you start putting it on blockchain or create a token out of it, there are quite a lot of benefits, operational benefits primarily, but there are also capital raise issues as well. So there's quite a lot of promise, but to be honest with you, I haven't seen anything that is institutional out there that you can actually tokenize a financial asset and then get a good amount of capital raised through that. Although, as I said, it is quite promising. And the last piece that is starting to happen is actually the reverse migration of what I would call as traditional crypto traditional crypto instruments back into the even more traditional market. So putting it in another way, just a couple of days back, I read about how an exchange traded product for a staking company based upon the Cardano protocol was listed on the Swiss stock exchange.
Wow.
So what I'm trying to say is that whilst all my colleagues on the panel were talking about what's happening on the crypto side, that was coming at it from a retail side. The real money and the real benefit and the real, let's say, horsepower or firepower is when we have an institutional solution. So to answer your question, there's quite a lot of demand that is coming in. And in terms of the challenges and opportunities, as I said, you will spend quite a lot of time in getting the retail side regulators like me. I mean, I'm very concerned. I'm very nervous about retail people having to go into these high risk assets, but I'm less concerned about institutional players going in. So from a compliance and regulatory perspective, this is a good market to have. But as I said, the conversations have to be grown up. And you have to talk about all the infrastructure, strategy, management processes, KYC in the same language that they are accustomed to when you're talking about equities, bonds, etc., etc. So quite fascinating. Quite a lot of interesting things are happening. And yeah, I'm looking forward to helping grow this market.
Super, super. All right. So moving on to Ghassan. Now you worked for HSBC, you worked for Bank of America, you worked for Barclays, EY, Deloitte. You work for so many of these large traditional institutions that Dr. Bhaskar was just talking about. What do you see here? What are the crazy shifts that you've been observing, given that you've also been a part of that ecosystem?
Yeah, I mean, I'd echo a lot of what Dr. Bhaskar said. I mean, I'll have to generalize here just because we're talking broadly, but it's important to remember that banks, especially large institutions, they're usually cautious, and anybody who's worked in a bank will know that they're pretty slow, right? They, in terms of decision making and execution, and actually moving to something. Now, having said that, there are exceptions. JP Morgan, for example, have been heavily invested in innovation. But I think the focus really is still on the opportunity. What can they do? What can they get out of it? What can they offer? And the technology. I mean, JP Morgan, to stick with them as an example, they spent something like $12 billion on the technology, and they hired something like 50,000 technologists. Now, obviously, they're not spending anywhere near that extent on risk management, regulation, compliance, whatever. So it's really about that side. Then the next piece is always about regulation, and given that there isn't consistency and there isn't complete clarity, it's really focusing on those aspects. And the way they do that typically is either direct engagement with regulators or through industry bodies, engaging with regulators. And for the regulation, again, it's focused predominantly, going financial crime piece. So, the KYC, AML, and so on. Now, they are doing things other than technology. They are doing things to aid themselves in those processes. But again, through technology investment, through customer identification systems, transaction monitoring, and so on, either in-house or through collaborations. They'll collaborate with various partners, digital asset custodians as an example, right, to safeguard themselves and basically outsource those requirements. So
Nice.
Those are kind of the main pieces. I'd say in the risk space, obviously financial crime compliance is a risk. It's a regulatory risk. But moving away from that, really, it's around in those places, it's around operational resilience, which is an extension of business continuity planning. Meaning, if there's a severe attack or systems are down, what are the repercussions and how do we respond to it? So in Europe, for example, there's something called the Digital Operational Resilience Act, which for this kind of space we're talking about really comes into focus when we talk about cyber risk. And again, going back to the same issues we've been talking about, right? Phishing, malware attacks, and so on. Because a lot of these, if you look historically, where there have been financial crimes, as Michael was saying, it's really around the infrastructure around it. It's not actually like the blockchain and the actual tech. It's an email phishing scam that's gone to an employee. Through that, they've managed to access funds and so on. So it's really about the pieces around it.
Yeah, and while we are on this subject, I think there's one very clear distinction in the way hacking also has evolved. Prior to digital assets, what you could do, you could basically hack somebody's computer, somebody's system, and you could actually just get data. And now you have to blackmail them and ask for money and say, if you want this data back, you need to pay me so many dollars, for example. With the advent of digital assets now, they can actually hack into your system and just get that digital value right away. Once it's moved from your wallet to theirs, that value is gone. So I think this is a fundamental shift that did not exist prior to digital assets, where you could digitally transfer value and you did not have to do anything beyond that. Therefore, so many attacks, and it becomes like any wallet with assets becomes a pot of gold for hackers to basically just go out there and target and then do all sorts of interesting things, social engineering, phishing, hacking, and create all sorts of scams to try and get that value out of there. So I think that is one thing that we tend to sort of underestimate about digital assets. Give it to that technology. Moving to Puneet. Puneet, you're working on the tax and the reporting spectrum, where your company is helping a lot of retail investors file their taxes. And when you talk about taxes, again, that's a subject which divides a lot of people. There's a lot of conversation around how crypto is being used for evading taxes. What are you seeing as part of your your entire business environment? Are people who are investing in crypto actually trying to evade taxes? What's happening, and how are you supporting them?
Sure. So the way I see it, Manar, is about, I would say, 80 to 90% of people who are investing into cryptocurrencies, at least the retail audience, they are coming in with a forte or a mindset saying that they can start generating better returns out of it compared to the traditional markets, and are speculating on some of the coins, trying to make more money out of it, and then come in with a mindset to make quick money. And that is prima facie with how a lot of people enter into this ecosystem, the retail ones. And then a lot of them do want to be compliant, do want to do it in a way that if they have earned money, they pay taxes on top of it, and then they want a peaceful life out of it. I would say small part of it, like maybe 3%, 4%, or 5% of it. This is common, I guess, in any industry. 3 to 5% of people would try to be malicious, would try to play around and game around the system, and then find hacks or ways on how they can evade and try to evade the taxes. But overall, if I talk about the larger ecosystem, Manar, I believe the larger ecosystem wants to be compliant and wants to pay taxes around it. Uh, Now the question comes in really about how much taxes is what people are comfortable with, how much, what should be the policies around, and that's where a lot of discussions and a lot of, debates can happen in terms of what tax is a good tax. But then, do people want to pay taxes and then stay compliant? Definitely yes. And this is a trend that we have seen in, and we started first in India and have now expanded in globally. And India has been a market, where fundamentally only like 5% of India's population pay taxes, the direct taxes, not the indirect taxes. GST, of course, is paid by anyone who makes any purchase, but then the direct taxes is only paid by 5% of the entire population, compared to other countries where it is 35%, 40%, 45%, even like in countries like Canada, US, etc. So there, the maturity is also, like when we are addressing to these markets, the maturity level that users come in is different. People take their taxes seriously, and people want to be aware about what are these strategies through which they can save the taxes, they can optimize their taxes, they can like harvest some of their losses, and like some of these techniques through which they are complying with the laws, and also like maximizing their savings. So this is depending on geography to geography, what type of laws does a uh, policy framework around taxation allow in. We see a lot of people using the maximum benefit around it. But
Nice.
yeah, to answer in the other part, how it has been evolving, I see like a lot of countries have today started taxing cryptocurrencies, even where there is no regulations, even when there is no clear regulations around how like a virtual asset service provider can go and register, get a license or things around. And I believe still in a lot of countries the taxation is very at its nascent stage. It just understands cryptocurrency from an asset point of view, from like from a point of view that people are buying and people are selling, and there is only capital gains requirement. But I think once we start looking at crypto from a larger point of view, from let's say utilities or NFTs, or it comes to like the assets or the securities part, and then the currency part, the taxation treatment could be way different. So I think a lot of maturity has to come in with different countries. But yeah, it's a good start, at least to start giving it a legal angle, and investors are clear that okay, I can now start actually like getting into crypto. All I have to do is like comply with the tax laws. But then the question before was, is crypto legal or is crypto not legal? Now the question is, if I invest in crypto and pay taxes, am I compliant or am I not compliant? I see that as a trend shift.
Lovely, lovely. I'm going to throw a curveball at you. Which country has the best tax regime today, in your experience?
I believe US has like the sophisticated one in terms of they treat lot of events differently, and then like have a taxation framework around it. So in terms of taxation framework, US. In terms of overall regulating the crypto space, Japan.
You seemed unfazed, so I'll throw another one at you. Which one was the worst?
Uh, I guess India, because you cannot offset your losses, and like you only have to pay taxes on the transactions where you're making profits. So this is fundamentally incorrect, because if a person is making money, he of course would also lose money. So like this is where I see India being the most strictest or most unjust, and also with the tax deduction at source, which is as high as 1%. That actually blocks a trader's capital. So I believe India is the one with the most like injustice tax framework today.
Sure, sure. While we are on the subject of tax, again, opening the floor to any of you who may want to maybe comment on what you guys are seeing in the tax space. Anything around the institutions, anything that's developing in that space.
So I can say that I mean, before I talk about taxation, just basically going to uh, what Dr. Bhaskar said and what Shami said about the regulation. I think what I have seen personally is that the whole ecosystem, okay, minus some sort of injustice in taxation, which I'll come to it. I think India has created an ecosystem now where India says that if you are a good boy or a good girl, I don't mind if you want to invest in crypto. You can put your entire wealth in crypto, uh,
Nice.
uh, and just to, make sure that you follow two or three very basic things. So point number one, I think RBI stand has been made very clear after Supreme Court judgment. If you see, there is a notification issued by RBI in May 2021 where it has told banks that you please go ahead and continue to support the crypto ecosystem, crypto exchanges. Make sure that you do two basic things. One is that ensure that you are having a robust KYC, AML stuff and all, and the sale purchase of crypto is not tripping over the FEMA parameters, right? So very, very simple things. If you are a company, no doubt, go and buy crypto, put into your treasury, make sure that you are disclosing it. Okay, in your balance sheet, there's some notification issued by Ministry of Corporate Affairs, and if you are a crypto service provider, now you have to go and register with FIU, and FIU is gone too advanced, and they have a good understanding about the entire ecosystem. Last but not the least, you pay taxes, file return, make declaration. In fact, I'm sure last year people who have who may have declared US crypto in the tax returns, they have also got refund of TDS which they have paid to the exchanges if they have not gone into losses side, right? So, and I personally have got my TDS refund, right? So no hassle free, I can sleep well. So if I do these kind of 3-4 things, I can invest whatever I want to do in crypto assets. So that's number one. From a tax standpoint, I think what your Puneet said is that yes, that's what impact the retail investors as such whenever you are doing the trading on exchange. But I think the tax goes beyond your simplicity trading on the exchange, because crypto comes with various opportunities in which you can transfer or get new cryptos. Let's say airdrops. Nowadays, so many meme coins are there, and they are throwing airdrops to you, right? So how do you account taxes for that? Recently, FIU has banned certain foreign crypto exchanges where Indians have kept their cryptos. Now, Indian exchanges have asked them to transfer their cryptos from that wallet to their Indian wallet, right? So, how this transfer of crypto from one wallet to the Indian wallet, how have you accounted for it? That may have some impact from a tax standpoint. There might be some sort of a forking which may come, right? There are issues in the sense where you may not even know that you had some crypto. Okay, somebody may have gifted you crypto in some conference in 2010 and 12, right? And then you find out that you have crypto. Now how do you declare it from a tax standpoint? Staking, right? So when you are receiving the crypto out of staking services, right? So are you receiving the staking rewards straight away from the blockchain? Then the tax will be different. And when you are receiving staking rewards from a staking intermediary, the tax will be different. So I think you have to really take a stock of how much crypto you have moved here and there, how much cryptos have come to your account, and then see how do you have to take your tax position and have to make tax declaration. And I think same thing will also apply to the institutions per se, that way.
Yeah, it makes a lot of sense. Yeah, once you get into the depths and the nuances, there is so much more, right? And I think virtually all the problems that you just cited, they're actually good problems to have, right? If you're getting airdrops, if you're getting free money, if you're getting crypto in a wallet that you had received at some conference, amazing problems
But
to
the
have.
problem is that if you don't handle it well, okay, in the year you earn it, after 3 years tax department will make you bankrupt, right? Interest, penalty, everything, and the value of crypto, okay, may not be there, but there are deemed earning you have, and you have to liquidate your real estate to pay taxation, right?
Absolutely, absolutely. Yes, one has to be very careful. All right. So, on that note, going back to the heavy subjects: money laundering, terrorist financing, cyber security. Michael, back to you. What are you seeing? What are what are some of the things that one can do to sort of stay away from these challenges, and what are the sort of safeguards and the guardrails you see are being developed in the space to prevent money laundering, to prevent terrorist financing, both, let's say, at the retail level as well as at the individual level, plus maybe what is the government doing you know around these heavy subjects.
That is a broad question.
Very
A
broad.
very broad question. Okay, so on the individual level, briefly, increased understanding, education of self-custody is vital. I think there's a trend to perhaps individuals and definitely government agencies engaging the services of custodian VASPs. I expect that trend will probably continue. your question about the risks of money laundering, would you like to narrow it a bit so I don't talk everybody's ears off?
Sure. So, what are some of the guardrails that you're seeing? So, one you mentioned, custody, the aspects around custody. What are the other guardrails that you're seeing, or what's happening maybe on the technology side that's helping us, stay safe within the crypto world from these risks?
Okay, so there were public outreach campaigns, again on the individual level, going back to phishing scams and pig butchering scams, romance scams. There will always be risk. There will always be risk because the criminals use their tried and tested methods to extract funds from their targets, from their victims. I think from a public agency point of view, those agencies which are contracting with custodian VASPs, so but of course regulated VASPs, yes, not VASPs in unregulated jurisdictions. I suppose and not wishing to promote any one particular custodian over another, and I've had discussions with some, not all. Over time, we expect more police agencies, civil enforcement agencies to get their hands on crypto, forfeited crypto, crypto that is evidence in a case during investigation, confiscated crypto. And for these public agencies, they don't perhaps want their own staff to accept the risk of holding on to keys and holding on to potentially very valuable assets.
Absolutely.
Yeah, and of course, individually, their insurance policies might not cover the risk. So when we go back to the services offered by custodian VASPs, I'm focusing on regulated VASPs, of course, yes, not cowboy VASPs, but that they are obliged to conduct KYC and CDD screening on their customers. They add an extra layer, in theory, of two-factor authentication. Hopefully, custodians separate client funds, which is, as we know, very straightforward with this technology, to avoid commingling and attaching criminal taint on previously untainted funds. One would expect that these regulated VASPs have their obligations, that they have procedures in place to effectively report suspicious activity. That would help, whereas perhaps public agency staff might not have the understanding of the skill sets. Perhaps I think. Well, I know. There's a clear move to international bodies, jurisdictions avoiding privacy coins.
Correct.
Yes.
Correct.
So you might have a custody VASP that refuses to touch privacy coins. Understandable for reasons why they might want to avoid privacy coins. I think it's important to say that whatever we do, whatever industry does, there will always be risks. That money launderers and terrorist groups, they're unlikely to use third-party custodians. Again, understandable why they would want to avoid that. But in terms of safety and security over funds held by public agencies, which are always held in the public interest, and these agencies are required to act in the public interest, there is clearly scope for custodian VASPs in the industry, and without question, the number of these custodian VASPs will increase around the world. It's undoubted. I think. What else would I like to say? I think it's important because not all VASPs are the same. VASPs are regulated. Custodian VASPs are expected to clearly disclose all the relevant terms and conditions. What are their fees for managing the assets? Say, what are the one that I'm interested in, and somebody touched on it earlier, is airdrops. But I think overall there is a move globally to better hygiene, if I can use that term, in this ecosystem. However, money launderers, terrorist financiers are unlikely to be interested in these services.
Sure. Sure. So essentially, going the regulated route, trying to have those separate financial market intermediaries with segregated duties, those kind of things, and maybe that's where. So I was smiling very broadly because at Liminal we work extensively with one of India's premier, law enforcement agencies, and we're actually in deep discussions with them, trying to help them navigate these challenges. So that's a real challenge. Uh, Outside of custody, I think what you guys are doing with Block AML, the education piece, trying to bring everybody up to speed on what are these different nuances of this asset class. Uh, it's actually one underestimates the problem that custody or self custody can bring when it comes to, like you were mentioning, if law enforcement has to seize assets, it's actually government property, subject to court orders, it's subject to a lot of procedures. Where is it going to be stored? How is it going to be stored? Who's going to have the keys? Who's going to have authority?
Absolutely.
There's lots of
Absolutely.
complexity.
Yes, and
Yeah.
of course, time is of the essence. So if there's a court order today,
Yes.
this afternoon, if you're in London, this afternoon is not the optimal opportunity time for you to have a conversation with a custody company, right? These procedures should be in place
Absolutely.
very soon, like now, ideally.
Absolutely. Yeah, I think, and thankfully that seems to be happening. There seems to be a lot of discussions around these pieces. Some of the LEAs that we are in touch with, they're building SOPs and they're trying to do a lot of stuff. So we definitely see movement there. Okay, that's great. Moving on, um, you know, Ghassan, let's talk about audits, and let's talk about how these third-party audits can essentially help secure the system, because you're a part of risk management. You've worked extensively in that space. Do you see that same traditional thought process of an auditor being like the third line of defense? Do you see that playing out in the digital asset space as well? What's happening there?
Yeah, I do. I mean, for a lot of the reasons we've already talked about in terms of where the risks lie, right? Which is always the focus of any internal audit. And I mean, the risks we've talked about, so the cybersecurity risks, the phishing risks, malware, ransomware, etc. Those obviously need to be mitigated and assessed. Assessing the controls, encryption methods, doing penetration testing, etc. In terms of the other risks which need to be you need to get sort of assurance on for this type of business. Operational risk is another one. So your people, processes, and systems. And within there, you've got transaction processing, data entry mistakes, things like that, operational resilience, which we touched on, and also smart contracts as well, in terms of how they're constructed and how robust they are, etc. Financial crime is the other area which we've talked about, and maybe a fourth is around third party management, right? So there's a lot of not necessarily yourselves, but a lot of companies rely on vendors, right? Security firms, whatever they may be, around their operations, and either access through those companies or outages, data breaches, whatever it may be. So there's obviously a requirement to have monitoring, service level agreements, and things like that in place. Now, having said all of that, any internal audit is obviously, the frequency and how you conduct it is based on the complexity of the organization and the frequency. But frequency is also, driven by regulation to an extent. So, for example, here in the UAE, VARA mandates a quarterly internal audit, which is quite unique. In at least in the region anyway, because the other regulators are typically based on, like I said, complexity, and they kind of leave it to you unless or until they come in to check that. So regulations also drive as to what needs to be done, and so it's a way of safeguarding and providing assurance around all those areas I mentioned.
Lovely. Shami, moving on to you, since we're talking about guardrails and since we're talking about these ways that we can sort of manage the risks around digital assets, What are some of the things that you're seeing when it comes to family offices? What are the things that you guys advise all of these institutions looking to invest in digital assets? What are those ground rules that you set for them
See,
to try and ensure that
it,
it is safe?
yeah. See, our advice is very simple, that you should have a custodian in place, because keeping the keys, private keys, is very tough. If something were to happen to you as an individual, then how the succession will happen, how it will move to the next generation. And there are good chances, if you are traveling a lot, then whether it is advisable to carry the keys always with you. And if you are leaving behind, then what happens if it is misplaced? How will you reclaim the assets? It's a complex process, and I'm not sure whether anybody can has a straight answer that yes, it can be reclaimed very easily. It is sorry to use it, but it is like a numbered account that we used to have in olden days with Swiss. If you have the number, you have the number, otherwise you're gone, the money is gone. Similarly,
Interesting.
the keys is very important. The other aspect that we look at is whether the AML and KYT, what we say, know your transaction type of things are available or not with the
Correct.
custodian or not.
Correct.
If you have KYT things available, on block monitoring is available, then it becomes easier, especially for institutions and family offices, to check whether the trail of the money is there or not. And the KYC becomes important for them. Sometimes reputation is very important for them to retain, and that's why good custodian, or I say good digital assets are important. I remember, just I little divergent on the topic. I remember one of the startups came to me. They were into fashion, and they asked me whether they can create NFTs out of the fashion pieces. I said yes, theoretically yes, but do you think that it will be valuable? The answer was yes. It may not be valuable today, but if I create NFTs today, and it may be valuable, say 5 or 10 years down the line. Now, if I say okay, you go ahead and do it, then where it is being stored,
For
it
these
becomes
many years.
important
Correct.
for these
Correct.
many years. And as an individual or as an organization, do you have that kind of a digital discipline? You have that kind of a servers, and with cybercrime increasing, that kind of a guards to prevent the cyber attack, or the other way around. So it's a complex answer, if I may say so. But yes, the more and more family offices and institutions are asking these questions, and our advice is go to the jurisdictions where they have clear-cut laws, hold the assets over there, declare it with the regulators. And someone was saying about the taxation. Don't worry about the taxation. If you're earning, you can pay the tax. And most of the people are not trading on the cryptos. They are using it as a store of money. And if that is the investment, which is the long-term investment, it doesn't matter. The taxation in the long run is more or less at the same lines what any other asset class would have.
Lovely, lovely. Thank you so much for that. I think we are almost at the end of time. Before we close, I'd like to give each one of you a small opportunity for some closing comments. I'm pretty sure there's a lot that I'd like to chat with you guys also about, but unfortunately we're short of time. Michael, quick closing comments.
Thank you. Right, digital assets are the future. Blockchain is inevitable. The criminal risks is ever present. Bad actors setting up VASPs as money laundering vehicles should not be ignored. Off-ramping in high-risk jurisdictions, or jurisdictions where there is no assessment of the associated crime risks or a lack of regulation, we need to think about those. Increased collaboration, communication, and cooperation amongst all of our stakeholders in the digital asset space is what we promote at Block AML.
Sure. How can our listeners, viewers reach out to you if they want to?
I'll certainly visit the Block AML website, find us on Twitter or LinkedIn. Feel free to get in touch. Regularly post lots of interesting reading material from the law enforcement vantage point, and constantly trying to stay abreast of the latest developments in this space.
Lovely. Gasan, closing comments before we move on?
Yeah, look, I mean, I think it's obviously it's evolving, right? We're still in the grand scheme of things, it's still very early. The industry is evolving. We're all kind of learning together. I don't think any one person has all the answers. We're learning along the way. And talking about upskilling, there's a lot of ways you can do that as an individual, whether it's through courses, blockchain council, for example, other types of certificates and so on. So yeah, kind of watch this space, and if you need any advice on the risk, I'll plug it, risk or internal audit space, feel free to reach out. So paragonconsulting.partners, or myself, Hassan Zaidan, on LinkedIn. And thanks for having me. Really appreciate being here.
Likewise, Gasan. Dr. Bhaskar.
I can truly hand on heart saying that sort of this underlying technology and the frameworks that are being developed are going to seriously disrupt the traditional financial field. And it is extremely exciting to see all the developments that are happening thereof. Well, the one thing that I've got to point out is that we can't keep on talking about the technology. For this to really move into the, if I will, or if you may, the grown-ups area, we need to talk in terms of the traditional way of speaking about securities and the entire panoply that has been set up. This new industry has to fit into the traditional finance world, and then it will really show the benefits. If we keep on saying this is decentralized, nobody needs to control it, it will always remain on the outskirts and on the far edges. The revenues and the benefits will come when it moves into the center. So, got a lot of exciting things happening in going forward.
Lovely. How can everyone reach you, sir?
I'm on LinkedIn. Happy to connect and speak.
Thank you for that. Ashish?
Yeah, I would say the party has begun. If you want to be an early mover, if you want to be an early kind of believer in the industry, I think it's the right time. It has always been the right time. The market would always be up and down. So it's a roller coaster ride, very, very enjoyable ride. But just make sure that you wear your helmets, you wear your seat belts, you wear your kind of guards, and make sure that if you fall, you don't die. So enjoy the ride, be part of the ecosystem, enjoy the ecosystem, but responsibly. You can reach out to me on LinkedIn. I mean, anyone who is investor, who is a startup, who is a builder, who is a technical guy, happy to share whatever I have learned in the tech space over the last 23 years, plus in crypto space over the last 3 years.
Lovely. Thank you so much. Puneet, any closing comments? And I'm going to throw in one small quick question there as well.
Couple of
Are we going to see Coinex also go the traditional route, go the center? And your closing comment.
Sure. So Coinex is already a SaaS product, so we are not decentralized. So it's a Web2 SaaS product serving the Web3 industry. So yep, that way we every transaction or every data that we monitor is on centralized servers today, and it continues to be that way. We do not want to complicate things unnecessarily. A. B. Closing remarks. Like a lot of retail users enter into the space understanding or getting into the mindset that I invest in crypto today, tomorrow a Lamborghini would be sitting outside my home. Day after tomorrow I become one of the richest man in the world. This like the perception of this industry could be that, but that is not the fact. Please do not enter into this space understanding that you'll make quick money and then enter into this gambit of making quick money. This industry there are a lot of genuine players working around building really interesting problems, solving really interesting problems, building really interesting solutions that will, like change the entire way of how we look at finance today. And there is a lot of interesting applications coming. Let's start using them. Let's get into more discussions with these sort of applications. Let's like make the industry mature while understanding the nuances and the challenges. And a lot of enterprises, as Ashish was mentioning, different type of events have different type of responsibilities to take in, from accounting, from taxation. Shreyap, like do not loosely consider these things. These things will come to bite back, and when it does, it can bankrupt you. So it needs to be taken care of very diligently. Shreyap, that's pretty much from my end.
Thank you for that. How can everyone reach you, Puneet? LinkedIn again.
LinkedIn, Twitter, yes.
Lovely. Shami, last closing comments.
See, I have a slightly different viewpoint on this subject. Till the time the regulators come on board and the governments shed their fear of losing their sovereignty or the power to manage the monetary policy, if the crypto becomes mainstream, till that time it will remain a niche asset class. And the second aspect about it is digital divide which exists. Not many people, even the retail investors who invest in it, really know what exactly they're investing in and what are the challenges they face, how to secure it. So till the time these two aspects are taken care of and there are more openness among the government and international regulators about it, this will not become a mainstream. Yes, some of the governments have taken steps, baby steps, in issuing their digital currency of their own, like RBI has done it. So we may see a different shape and kind of this than what we know as of crypto today, which will become digital mainstream, which will be a digital currency issued by various central banks. Now, whether that will become mainstream and that will go ahead, it's too early to say yet. Because no matter what I say today, even after digital age, in countries in Africa, in India, still hard cash counts. So till the time we reach that stage, yes, it will become a niche product, and probably the first early adopters will be institutions. The moment the regulations and taxation is clear, and it will be of huge use. Like Swift has taken steps in this, where they're recognizing the crypto and they have started moving in this direction. So that may be a good indicator that yes, it is moving in the right direction.
Lovely. Fantastic, sir. How can everyone reach you, sir?
They can reach me on LinkedIn.
All right. Thank you so much, everyone. It was a wonderful session, indeed, very insightful for me as well. I hope you guys had a great time. Thank you once again, and I will look forward to engaging with all of you on your respective LinkedIn and Twitter handles. Thank you. Have a nice day.
Thank you, Manoj.
Thank you.
Thank you so much. Thank you, everyone,
Thanks.
and thank you
Thanks.
for
Bye.
listening. Thank you.